In our research, we often see how a single official letter arriving in your mail can instantly shatter your sense of financial security. From what our team discovered, nearly 90% of new freelancers fall directly into this invisible tax trap during their very first year. You might think earning $10,000 monthly makes you financially secure, until we break down how much taxes actually take back. When we calculated the numbers, we found that a 15.3% self-employment rate catches most creators completely unprepared. We all know that feeling when you first leave your corporate routine, driven by the inspiring goal to work on your own terms. As our team observed across many cases, that initial freedom gives you an incredible rush of confidence and unlimited creative energy. However, we noticed that early momentum often blinds you to the complex compliance obligations silently building up in the background. When you receive your very first full client transfer, we guarantee it brings a deep sense of validation and professional pride. Because no taxes are automatically withheld, your bank balance looks massive, creating what we call a dangerous illusion of wealth. In our experience analyzing financial habits, this early optimism is exactly where fundamental misunderstandings begin to take root. Naturally, you start buying upgraded gear and expanding studio equipment, thinking you are simply reinvesting your hard-earned revenue. We frequently see creators treat their business account like a personal debit card without setting aside necessary tax reserves. Several months pass by quickly in a steady rhythm of client projects, and you feel great about your business progress. Until suddenly, as winter ends, we all reach that unavoidable date on the calendar, the annual tax deadline. As our team has observed, this exact moment is when unexpected financial liabilities create overwhelming mental stress for freelancers. You log into your accounting software with a confident smile, fully expecting to receive a comfortable refund check. But as you input your final earnings, we watch the screen summary turn into a stark red negative number. You sit there stunned as the system calculates a heavy payment requirement that you simply do not have saved. Our research confirms that self-employment taxes are the biggest financial surprise for independent professionals without prior bookkeeping guidance. Think back to when you were an employee. Your employer automatically handled tax withholdings behind the scenes every pay period. Now that you work for yourself, regulations classify you as both the worker and the operating employer simultaneously. This means you must cover the full self-employment social contribution rate without any corporate employer matching your payments. We often forget that traditional office workers only pay half, while their companies pay the other half silently. As a solo business owner, you shoulder this entire percentage alone, which catches so many creators off guard. What we find crucial to understand is that this contribution kicks in right from your very first dollar of net earnings. Whether your income was $5,000 or $50,000, these baseline contribution rules apply across the board. To make things even harder, standard income bracket taxes still apply on top of these baseline obligations. When we combine all local and national factors together, your total effective rate can easily push past 30%. In plain terms, nearly 1/3 of every single dollar you earned was never actually yours to spend freely. If If you already spent those reserved funds on lifestyle or studio gear, our team knows how painful that cash shortfall feels. Discovering this gap suddenly forces you into intense stress as you try to figure out your next financial move. You begin searching online platforms late at night, hoping to find practical ways to solve this unexpected account balance. That is when we hit the second big realization. Self-employed workers are actually expected to pay estimated taxes every quarter. Most people we speak with assumed tax payments were purely an annual chore that only happens once a year. In reality, authorities run on a pay-as-you-earn model, expecting you to send payments 4 times throughout the year. If you miss those quarterly windows, our analysis shows how late penalties add even more unnecessary fees to your bill. These extra costs raise your overall balance, compounding your financial stress when you are already struggling to catch up. We know firsthand how this sudden pressure can completely freeze your focus and drain all your creative inspiration. You find yourself refreshing your banking app repeatedly, hoping a new client invoice lands just in time to cover it. Desperate for relief, you might turn to write-offs, hoping business deductions will somehow magically wipe away your balance. Here's a major myth we want to clear up. Write-offs do not make purchases free or fully reimbursed. Buying expensive tech gear assuming it completely erases what you owe is a costly mistake our team sees constantly. Let us clarify. Deductions only lower your total taxable income, not your final dollar-for-dollar bill. For example, if you spend $1,000 on equipment, we calculate you might only save a fraction of that. You still spend real cash out of pocket that you could have kept safely in reserve for your emergency fund. Relying too heavily on write-offs leaves many freelancers with great tools, but virtually zero cash left when payments are due. This pulls you into a grueling cycle, chasing new gigs constantly just to pay off previous debt burdens. In our interviews, creators admit taking on stressful, low-paying projects out of pure financial desperation to survive.
Let me review the figures and I'll get back to you first thing tomorrow.
The freedom you originally sought gets completely lost under the relentless pressure of chasing immediate cash needs. You end up working 12-hour days, yet your bank accounts barely stay afloat due to accumulated financial backlogs. When we analyze why this happens, we realize it stems from a total lack of practical financial education in traditional schooling. Schools teach advanced algebra and theories, but completely skip real-world accounting rules that you need to survive. So millions of us enter the gig economy completely blind, forced to figure out self-employment management entirely on our own. The good news? You do not have to remain a victim to this trap. We are here to show you how to fix it. The most successful freelancers we work with survive by building clear, disciplined, and organized financial systems right from day one. Step 1. Open a dedicated business bank account immediately and completely separate your company money from your personal budget. Trust us on this. Mixing personal expenses with client payments is the absolute fastest way to guarantee accounting mass confusion. Step 2. Every time a client pays your invoice, transfer 30% immediately into a separate tax savings account. Our top recommendation is simple. Pretend that reserve money does not exist because it belongs to your tax obligations. By automating this habit, we guarantee you will eliminate 90% of the panic most people feel during tax season. Step 3. Set strict calendar reminders to submit your estimated quarterly payments on time, every single quarter. When you pay smaller amounts 4 times a year, you prevent giant, terrifying bills from catching you by surprise later. In our opinion, maintaining simple, consistent financial discipline matters far more than trying to optimize every single penny. Once your business revenue grows past $50,000, we advise exploring formal corporate entity structures for better efficiency. Setting up a proper entity allows you to pay yourself a reasonable wage while legally reducing self-employment contributions. While corporate filing takes extra admin work, our team found that the long-term tax savings make it entirely worth your effort. We strongly recommend investing in a certified accounting professional to help guide and protect your growing business. A great CPA will save you far more money than they charge, while giving you complete peace of mind about compliance. When you start treating your freelance work as a structured business, we guarantee your entire long-term trajectory changes. You stop seeing yourself as just a solo creator taking gigs and begin acting as the chief leader of your company. Take charge of your cash flow management starting today so you can build a sustainable, highly rewarding career. From our perspective, financial clarity is the ultimate foundation for true creative independence and personal peace of mind. Do not let hidden tax traps ruin your dream. Start implementing these steps today and take control of your financial future. If our breakdown helped you today, please leave your thoughts in the comments and subscribe to our channel for more insights.